What's up, everybody? Welcome back to my channel. In today's video, we are going to talk about why infinite banking is not a scam. I mean, you hear from Dave Ramsey, you hear from the Susie Ormans of the world that infinite banking is a scam. It's a bunch of snake oil salesmen just trying to make some money. Now, in the life insurance industry, people can make a lot of money on commissions just selling life insurance. That's not a lie. And that's not a scam either. That's protecting your family when you pass away. It's inevitable. We're all going to die at some point, but that's not what infinite banking is. Infinite banking is not a product. Infinite banking is a concept. It's a concept of how to use a product. You could do infinite banking with an equity line of credit on your house. You could do infinite banking with a credit card. You could do infinite banking with your regular checking or savings account. But that's not the best product to do it with. And in this video, we're going to go over exactly why. I hope you get a ton of value from it. If you have not subscribed to the channel yet, make sure you do that. Hit the bell and the thumbs up. It really helps out the channel, and I would greatly appreciate it. So let's dive right into it. So infinite banking, why is it not a scam? Well, first and foremost, again, it is a concept of just mimicking what banks do. Now, think about your own life. You have money that is flowing somewhere. It has to. It's got to flow somewhere. Most people, what they do is they flow their money to a bank. Chase, Wells Fargo, you name it. That's what we've been taught to do. And then as the money flows there, we use it when we need it. But think about what the bank does with that money. As soon as you deposit the money in the bank, they lend it out to someone else. Because with your money in the bank, it is a liability to the bank. They have to pay you interest in order for you to keep the money there. However, if they lend it out, they turn your money into an asset for them. No longer is it a liability, it's an asset by just simply loaning your money out on a car, on a house, on a student loan, on a credit card, whatever it may be. But what they do is very simple. They pay you to have your money on deposit. Then they lend the money out to somebody else for higher than what they're paying you. It's very simple. If they pay you 1% and they lend the money out at 4%, they make a 3% spread on your money. They just use your money to make like a 300 or 400% return. They turned 1% into 4%. That is a 300% return. Incredible. All you're doing with infinite banking is you're mimicking that. You're using somebody else's money, the insurance company, to go make more than what they charge you to use it. So simple. So what happens in a policy is quite simple. You put your money into the policy, it's guaranteed to compound and grow. It'll never stop growing. It's going to grow whether the market's up, whether the market's down, whether the market is sideways. That means that you're going to get compound growth that never stops, and it's tax-free. So 0 taxes to Uncle Sam. And by the way, taxes are the biggest eroder of wealth there is. So infinite banking is just a concept of how to move money, to mimic banks on how they move money. What they do is they use our dollars to lend out to other people as many times as they can. With the velocity of money, they make a spread on each transaction, and they're in control of our dollars, which is why they can make 400 to 1,300% on our money. You can look that up on BauerFinancial.com. There is not a bank in the nation that makes less than 400 to 1,300% on your money. Wouldn't it make sense if you could just take back the control and do what they're doing? You could make that on your money. Here's the crazy part. Banks do this with our money. They also fund billions upon billions upon billions of dollars of whole life insurance policies. You can look this up. It's called BOLI, bank-owned life insurance. Now, are the banks stupid for doing this? Are they part of a scam? Definitely not. They are smart. They know how to move money. They know how to multiply money. They know how to protect money. If you put money into a whole life insurance policy with a mutually owned company that pays dividends, the money is protected. It can't be touched on lawsuits or judgments. It is going to grow guaranteed way more than any bank account would. So why would you flow your money to a bank when you could flow it to a policy? It's more protected. It's going to grow more. It's going to grow tax-free. And then here's the kicker. You can use that money and go make more with it, just like the bank does. So think about this. You put money into a policy. It's protected against lawsuits and judgments. It's guaranteed to grow tax-free. Then you can borrow against it. So you use your money as collateral to go get a loan from the insurance company's general funds. You're basically just getting an advance of your future death benefit. Now you can take that advance and go make more money with it. It's just like the banks. They do the exact same thing. Remember, they pay us for having our money on deposit. Then they take that money and go lend it out. They keep the difference between what they paid us and what they made. No different with a policy. You put money in a policy, it's guaranteed to grow. It's guaranteed to compound, tax-free. It is protected against lawsuits and judgments. Then you borrow against it. So you borrow your future death benefit while you're alive, and the insurance company charges you an interest rate. So let's say they charge 5%, which is generally what it is. If they charge you 5%, and you can now take that money that you're controlling now and go make 10%, 15% on, let's say, a private money loan, hard money loan, something like that. If you guys want to figure out how to do that, there is a link in the description for Private Money Club. Check that out. But here's the crazy part. If you can control that money from the insurance company now at 5% and go lend it out at 15 and keep the 10% difference, you're mimicking what the bank does. You're using somebody else's money to go make a spread. Here's the kicker. The whole time you're doing that, every dollar that you put into your policy is protected against lawsuits and judgments and is guaranteed to grow. So you're making that 10% spread while your money is compounding and growing. It never stops. Here's why. You see, the reason that's possible is because you're not actually using your money. When you put your money into a policy, that money is sitting there as collateral to get a loan from the insurance company's general funds. So your money's not being used. That's why it can sit, it can compound, and it can grow. And that means if it keeps growing and you can borrow against it at any time, the longer you give it, the bigger it gets. And the bigger it gets, the more you can borrow. The more you can borrow, the more you can go mimic what the bank does and make a spread on more money. It is genius. It just takes time. It's not going to happen overnight. It's not a get-rich-quick scheme. You have to fund your policy. You have to put money in. Same thing with a bank. A bank is not going to make any money unless they can get deposits. People have to deposit their money into the bank in order for the bank to take those deposits, fund whole life insurance policies, BOLI, bank-owned life insurance, billions upon billions of dollars of it, take it, then borrow against it and lend it out on a car, a house, a student loan, a credit card. It doesn't happen without the deposits. Same thing with a policy. You have to first deposit money into your policy. That money is collateral to borrow against your future death benefit. So if you've got 200 grand in your policy that you've put in and you've got that in cash value, you can borrow against it, take a loan from your future death benefit of 200 grand that you never have to pay back. You're in total control because the insurance company knows without a doubt you're gonna die someday. They just don't know when. They hope it's way in the future because the longer you live, the longer they can use that money that is in the general funds that you're putting in to go make more with it. So the bottom line is you want to live for a long time. The insurance company wants you to live for a long time, but they know and you know you're not going to live forever. So when you die, it's inevitable, it's going to happen, you'll have a death benefit that they have to pay out to your family. Let's say throughout your life, you used $1 million of your death benefit, your cash value, to go be the bank like I'm talking about. And let's say your total death benefit was $3 million. So if you never paid back that million, because you don't have to, you can go take it and keep making more money with it, which is what I do. They're going to pay out your family the death benefit minus what you didn't pay back. So they'll just pay them $2 million instead of the full $3. This is the thing, guys. Once you understand how things really work, once you understand how things really are, it all just makes sense. A lot of people have this notion and concept that infinite banking is a scam. Infinite banking, again, is just a concept. There's no concept that can be a scam. People think it's a product. They think life insurance is a scam. However, most life insurance is basically term insurance, which is just renting insurance. If you die during the term, your family gets a death benefit when you die. 99% of the time, people outlive that term. So it doesn't pay out 99% of the time. Whole life insurance, regular whole life, most people think is super expensive and it just doesn't make sense because it takes forever to build cash value. That's true if it's built for the death benefit. What I'm referring to, a policy built for infinite banking, is built for the cash value. The cash value is what you can use while you're alive. Think about this, guys. It's not called death insurance. It's called life insurance. If you structure it correctly, you can use it while you're alive, and it should be used while you're alive. If it's used while you're alive, you're able to, one, guarantee that you become wealthy, that your family becomes wealthier when you pass away. It's gonna happen. When you pass away, your family will get a tax-free death benefit. And if you structure it correctly, you can use that death benefit while you're alive, tax-free, because loans are never taxed. It grows tax-free. It's protected against lawsuits and judgments. So if you got a bunch of money in a policy, can't be touched. And here's the kicker. You can use it and never interrupt the compound growth. So guys, infinite banking is nowhere near a scam. It is a concept, not a product. The best product, though, is a whole life insurance policy with a mutually owned company that pays dividends and is structured for high cash value, not for a high death benefit. So I'm sure you guys have questions. In the comments, go ahead and put what you guys have questions for. I'll make sure to get to as many of them as I can. And if you guys want to learn more about how this works, there's a link in the description. Go ahead and click on that and then register for my free training video. It's an in-depth video. It gives you illustrations, it gives you visuals, and that way you can learn as much as you want about the concept. If you want to learn even more after that, you can schedule a call with my team. They can answer all your questions. And if you want to get a policy, my team can help you set it up. We only set up policies built for infinite banking. What that means, we're taking a lower commission in order to get you cash value. So we're not after the commissions. We're after helping a lot of people. We're going to make less commission per policy, but because we're after helping a ton of people, there's strength in numbers. So the more people we help, the more money we make. So guys, it's an absolute pleasure to serve you. If you have any questions, put them in the comments. If you have not subscribed to the channel, make sure to do that below. Hit the bell so you get notified when I put out these videos, and hit the thumbs up because the algorithm said so. So I appreciate you guys, and until next time, peace.